ecostrategy.com.
This is Christopher Lewis looking at the upcoming July 17th trading session. And as you can see, Thursday is a fairly quiet day as far as economic announcements are concerned. Certainly in Asia, that is definitely true. This entire stretch of announcements during the day should have very little market moving effect. And as a result, these are the kind of minor announcements that you look at as a gauge of the total picture of an economy. However, once we get into Europe, you can see that we have the Eurozone CPI core. And the core CPI, of course, year-over-year June final can be market moving. It's expected to come in at 0.8%, which is what it was last time. After that, we have CPI month-over-month and year-over-year. And both of those, as you can see, are listed as medium. I look at this as a total picture here. We get a bunch of bad news that can be very negative for the euro, for equity markets in general, especially in Europe, but could actually affect even the US markets if Europe seems to be struggling. There are some concerns now about a possible slowing in Germany, and that would be very negative for world's markets in general. Once we get into the U.S. session, we start to look at one major, at least in my opinion, possibly major announcement, and that is initial jobless claims. 310,000 added for the month of July is anticipated, but having said that, the last was 304. This is a volatile number, but it does give a little bit of a read as to what could be going on in the employment market, and that is always going to be important to the stock market as well as some of the forex markets. There is an outlier here. The natural gas storage change comes out, and that, of course, could be a market moving event, specifically in the natural gas markets. Tends to be the one announcement that nat gas pays the most attention to. But that being said, in general, it's not a massive mover of the overall markets. Looking at the S&P 500, you can see that we did in fact have a positive session on Wednesday, but we remain below the vital 2000 level. So having said that, it's really a market that is probably more or less buy on the dips. We are channeling a little bit to the upside. Once we do get the break above 2000 though, that is going to be an extraordinarily bullish move. You can also see that there are several areas here below that could cause bits of support, so really pullback should continue to be buying opportunities. Looking at the Canadian dollar, you can see that we have in fact shot higher during the session on Wednesday, but found 108 resistive as one would anticipate. Pulled back and formed a little bit of a negative candle. I believe that there's enough bullish momentum though that we will eventually break above 108. Once we do, 109.50 will be calling. Pullbacks should continue to be buying opportunities as long as we can stay above this little bit of a trend line that goes all the way back to the bottom of the market several months ago. The pound dollar continues to slash around the 172 area, just below it I should say. And as a result, it looks very likely that we will eventually break out. But really, at this point in time, it just seems like we're trying to build up enough momentum to get above the 172 handle. Once we do, I believe that 175 is calling. I also think that 170 to 169 is a significant amount of support. I do not think that the market can break below there, so therefore I am calling that the floor. And looking into the euro, you can see that we did fall significantly during this session, but if you watched yesterday's video, you know that I had anticipated a move down to 135 and then the possibility of finding support. Finding support there would be a decent buy signal. But on the other hand, if we break down below 135, based upon longer term charts, I believe that we could go down to 133. And that is a look at the July 17th trading session.